Morning, everybody. I am Bob Iaccino. Welcome to the PureXposure Growth Series live stream. It's a pretty interesting time. I mean, things are happening that we haven't seen before. Obviously, I don't have to tell you what the novel coronavirus is. I don't have to tell you that it's been named COVID-19. I don't have to tell you that the markets are being affected not only with a depth but a speed that we really haven't seen, honestly, since, I don't know, 20s, 30s? When was that? I'm here joined with Scott Shellady, the cow guy. Scott's been on a couple of our shows before. Do you want look at you are so ready for this day.
You have to add a little levity to the situation. You know, and this is a great time to say this to everybody out there. This is when sometimes these markets are very emotional, right? And your emotions can be your own worst enemy, right? Your imagination can be your own worst enemy. So you need to make sure, as not just in the markets, but in your life, you need to keep those things in check so you make the right decisions.
We're also joined by Amelia Bordeaux on Skype. Amelia is from Compass FX. And Amelia, you haven't been on before, so I want to give you a few minutes to talk about your background and where people can find you, and we'll bring that up again. We got a pretty long segment to go through here, so go ahead and take a few minutes and tell everybody what you do, where you're from, what your background is.
Hi, well, thank you for inviting me on. I really appreciate it. Thanks to everybody for watching. My name is Amelia Bordeaux. I'm the founder of and CEO of Market Compass, LLC. So that's a company that helps individual or retail investors better understand markets. We're mostly foreign exchange, FX spot, and futures based. So I give commentary and strategy and trading opportunities, mainly in the FX market, but because my background is global macro, we do look across asset classes as well. My background is I come from Wall Street. So I actually started my career about almost 18 years ago at the Federal Reserve Board in Washington, D.C. I worked in the International Finance Division, and it was Asia financial crisis, and the Russian debt default when I was working there. It was also the introduction of the euro. So I worked in foreign exchange at the Fed, and that launched my career on Wall Street. So I worked at some of the big banks. I worked at Deutsche Bank, at UBS, on the FX trading floor. And at the times that I worked there, they were the world's largest traders of foreign exchange. So I also worked at a couple global macro hedge funds as heads of strategy. And so I get to talk to the buy side, I get to talk to the sell side. I was trading in sales at Westpac Bank, an Australian bank,
right,
and also UniCredit Aga. So I have a lot of experience. I've been in the market since Asian financial crisis. So I've seen the crises. I've seen the 2001 recession. I've seen, the financial market crisis of 2008 and recession, and European banking crisis and Greek crisis. So this seems like we're heading into another crisis triggered by the external shock, as you mentioned, coronavirus.
So I want to go right back to you, Amelia, but I want to mention something really quick, is that you two guys know this. We actually, because of the effects of the virus, we actually had cancellation of guests for the show, cancellations of staff in the booth right now. So I want to compliment the booth, how they got this show together with some of the replacement people that they were able to bring in. And the fear is even affecting a little small operation like us. So if there's glitches, like I said the wrong company, for example, right? Tell me, just repeat the company again so that everybody gets my correction of me saying the wrong company. And then you have been around surprise Fed moves before, which we should bring up, right?
I have, yes. So the name of my company, again, is Market Compass, LLC. And that's quite fine. I'm sure, like you, I've been, you've been up all night, and I've been up all night watching these markets. So I totally understand, trust me.
So tell me, you've seen moves. We got a Fed move last night, right? Basically Sunday night, Sunday afternoon, I think it was, Amelia?
Yeah, around 5, yeah.
Yeah, so tell me what you saw and how this compares to surprise moves you've seen before.
I think the speed of the move was just really quick in terms of the futures being so negative after Chairman Powell's press conference, which was at 6:30 p.m. Eastern Standard Time. I'm actually a distance runner. I'd gone out for my long run. I had come back, and I always have my phone and my alerts on. And as soon as I came back, I had seen Fed emergency rate cut, and I thought, wow, I wasn't entirely expecting it Sunday night, but in retrospect, it makes sense because they wanted to get ahead of, obviously, the Asian market open. And I thought that when the Trump administration instituted the UK-Ireland travel ban, that was going to be quite bad for at least the pound. I knew that when I had seen that on Saturday. And so I thought we might get a disorderly open Sunday night into Monday. And so it makes sense now that the Fed did come out and react. I think what's most worrying to me compared to other times of surprise moves that the Fed has conducted is that the futures are still negative. This didn't seem to rally any positive sentiment on Wall Street. Instead, Wall Street seems a little bit more freaked out that they did this big policy move last night, coordinated dollar swap lines with G10 central banks, cut rates to, 0. And so it somehow didn't calm traders or investors. It somehow made them more nervous that what's happening with this external shock coronavirus is going to hit the economy perhaps even worse than they had forecasted or anticipated. That's what's
Scott, do you think that, do you agree with Amelia that the surprise of it, I mean, we have a Fed meeting this week, right? Do you think it was really that they announced it on a Sunday night? Do you think there's more to it? What's your overall view of what the Fed did so far? I mean, there's two moves we're talking about here, right?
Yeah, I think my personal take is after 32 years in the business, it was a colossal mistake on their behalf. I understand why they did it, but that doesn't mean it's right. I'll just put it this simply, and I've been saying this on television all last week and the week before. Until you can get Ma and Pa Kettle to come out of their house and go to dinner in Chinatown without worrying about anything, then I would start to inject cash in the system. But right now, we're throwing all this money at a problem where it's not going to get any better until people can come out of their houses.
Don't you think that they're getting out of the way, so to speak? I mean, they're at zero now.
But they should.
So if there's a recession, what do?
Well, exactly right. Well, they've wasted all their bullets now, right? Mm-hmm. And the talk of no negative rates in the U.S. How close are we now?
Yeah.
So bottom line is this. I would have been accommodative. I think that that's the right thing to do as a government, but only when we started to see the amount of daily cases start to subside. When we start to have the psychological issue start to heal itself, and then I would come in with a monetary stimulus. But right now, you cannot fight a psychological problem with monetary stimulus. It's just not going to work.
So, Amelia, what do you see happening? Well, first of all, which currencies are you watching the closest? And what do you see happening in there versus what maybe somebody could actually trade? Like, should we be trading today in FX?
It's very tough. A lot of the G10 currencies have broken significant levels. The speed at which they've moved has been so fast. So what I think is important to look at today mainly are two currencies. The Australian dollar and the British pound, and we'll go into why. In terms of safe haven currencies, I just want to put this out there first. The dollar index, for instance, and the Japanese yen, another safe haven currency. They've been really swinging around wildly, switching almost day to day which one is the preferred safe haven currency based on the news flow. So right now, I actually would stay away from trading the safe haven currencies because you have to be in front of your screen minute to minute watching the news to see what's affecting which safe haven currency.
That's interesting.
So yeah, and that's different than even a week ago.
Yeah.
That's very different than 7 days ago when you could be long Japanese yen and know that for a couple days when the Dow was falling heavily that yen would also strengthen. But that's not the case right now. So what I'm looking at is Australia dollar first and foremost because the Reserve Bank of Australia came out yesterday or Saturday, over the weekend, and they announced that Thursday they're having an extraordinary emergency policy meeting this Thursday in Australia. And so it's most likely that market anticipates that they're going to cut rates following the Fed, and that they're also going to introduce quantitative easing in Australia. So this is a big deal, and this is supposed to happen Thursday in Australia. So the market is really going to be focused on the Reserve Bank of Australia's monetary policy meeting. And I think that will continue to weigh on Aussie if they introduce quantitative easing in Australia. So I know Aussie's fallen a lot already. You may be looking at these charts and saying, we missed the move. We missed a significant move if you didn't have this on, a week ago. But we're through some significant lows. We're through a 2008 low already. But we can go lower. There's not a lot of technical support below where we're trading now on that June futures contract in Australia.
You prefer in a situation, I'm sorry to interrupt you, but do you prefer in a situation like this to wait for a rally back or miss the trade, or is it something that you kind of shrink your position size down and scale into it?
I would shrink my position size and scale into it. It's heavy. It's obviously trading heavy, and we know we're going to get significant news out of the RBA on Thursday. They put out a statement that we're going to get significant news on Thursday. So, don't fight the RBA. Something big is coming. We know when it's going to be, sometime on, Thursday, which is overnight, Wednesday night on the East Coast, our time. So, yeah, I would try to keep the position small initially and head into it. The other thing is Aussie dollar is a high beta currency, and what I mean about that, what that means is that it's correlated with movements in equities. So obviously, U.S. equities look like they're going to be halted at the open today. Futures are down heavy. So as long as U.S. equities are falling, especially so heavily, that should also weigh on the Australian dollar. And the last thing, Aussie kind of has this perfect storm that's just unfortunate for it, but makes for an identifiable trading opportunity right here. I feel like a clear trading opportunity. And the last one is China economic data, which has now started to come out after the peak in the Wuhan coronavirus. It's not the Wuhan coronavirus, but the peak in the shutdown of the city of Wuhan due to the coronavirus. And so that really contracted economic activity in China. And overnight, we got China retail sales in February were down over 20%. So bad news for China economically is bad news for Australia, as over 30% of Australian exports go to China. So that the new news coming out of China, the slowdown, which the markets anticipated, but they didn't anticipate how strongly the economy was slowing, or the strength of the slowdown can also weigh on Aussie, and more of those data are going to be released ahead.
I want to go to Scott real quick, but Amelia, I want to ask you a question about the yen after I talk to Scott about the dollar. Because my concern right now with the dollar, we're seeing the yen, we've got a yen chart up on our Power E-Trade platform, and it's up about 2.62% right now on the Globex at the CME, and the dollar index specifically is up, but not up that much. So my question, Scott, you're macroeconomic. The dollar, one of my fears is that the dollar strengthens too much. And then all of this stimulus, you lived in the UK for a while. So the UK had originally announced, I think it was 7 billion or trillion, I don't remember. They announced a stimulus package. And if the dollar strengthens, that stimulus package globally just becomes weaker, right? Because the dollar is getting stronger and stronger. So how much does that affect? Do you think there's that could have anything to do with why the Fed went so much so quickly? Is so that when these other countries, maybe they've weakened the dollar to the point where it can be weakened for these other stimulus packages to maybe take hold? Because we probably have a recession in Europe coming, right?
Oh, I think definitely. But number two is, because it was so much so quick, a lot of times, and the Fed has been consistent, but they've been consistently wrong, at least for a long time that I've been trading. And I think that they've given the market reason to be nervous because of these breadth and quickness of the move. I think that, again, had they waited until things have started to subside and a little bit more of a measured approach would have given people more confidence about where we were going in the long term. So I think that this could have the negative effect in more ways than one, and the strengthening of the currency could be one of those, because you're going to see people all over the world with their little one-lots going to want to be involved with the U.S. dollar as a safe haven play because, oh my gosh, what's going on here, rather than let's wait and see how this all plays out. And before we went on air, bringing up England, I've lived there for 16 years. It's interesting to see, and they're catching a lot of flack for it, and I don't know if they'll be right or wrong, but they've gone down this herd immunity line where they're going to just let the thing basically play out. They had Cheltenham Gold Cup, which is like their big horse race over the weekend. 60,000 people. They said, have at it, have fun.
And so, they had 60,000 people show up?
Yeah. And so they're going to take a different view of this, and it's going to be interesting to see how that plays out too in the currencies. So I don't know. I think that the size, strength, breadth, and width, and the timing has probably hurt things in the short term rather than help things, and hopefully that works out over time. But that's going to give a false boost to the dollar, I think, as well.
Amelia, in terms of the yen itself, again, we're seeing safe haven buying, right? In situations like this, given that the Japanese economy has overall been one of the consistently worst ones over the last, say, 25 years in terms of being able to generate growth, generate inflation. They've got a population problem. How much does that play into how much longer this can be a safe haven currency. In other words, I would think, and you could correct me if I'm thinking wrong, because this is your area. And by the way, real quick, shifting gears, the CME Group, who is, full disclosure, one of our sponsors, has some really small currency futures contracts. So in terms of shrinking position size down. But back to the question, the yen itself being a safe haven currency in an economy that is going to get weaker and weaker as the globe goes into recession. How do those two things play off of each other?
Interestingly enough, I've found in my years of trading, all my years, even the last crisis, the European banking crisis, the US recession, and the Greek banking crisis, yen is a pretty consistent safe haven currency. Yen typically on the day-to-day movements of when you're sitting on the trading floor watching yen all day, 8 hours a day till you hand the book over to Asia. Yen typically does not trade off economic data of Japan. And I know that doesn't sound, I know that sounds a bit crazy, but typically on a day-to-day basis, the domestic data of Japan doesn't really affect how yen trades. Yen is almost purely, there are times of exception, a risk on, risk off currency. And so what really has been happening over the past, and I don't think that'll change in this immediate crisis. I mean, you're right, maybe that will change over the next 5 to 10 years, but in terms of trading right now or the next 6 months, I don't think that's going to change unless we get substantial dislocating economic news out of Japan. The only thing that could impact Japan, I think, a little bit is if they announce the Tokyo Olympics are canceled, or it looks like now they're talking about moving them back. But that was going to impact GDP in a positive way for Japan over the August month, and now that may be pushed back or canceled. Hopefully they'll be pushed back for economic reasons and for the athletes. But in any way, what we've seen the past couple weeks is, well, actually since the end of January, when we first started hearing, at least in the market, about coronavirus, it was only in China. And if you look at the World Health Organization statistics, that was like, they started reporting like January 23rd, 22nd, 23rd, 25th. And at that point, U.S. equities were still rallying. They were more volatile, but they were still rallying. And the dollar started to strengthen massively. The dollar index was almost reached 100. It had broken multiple levels on the top side. The dollar was really strengthening. And then all of a sudden, when the virus spread outside of China, throughout Asia, into Europe, and then to the United States, U.S. equities started having those massive down days, down 1,000 points. And that's when the dollar started weakening. So all of a sudden, the market focus went from, the problem was contained in Asia. That's where the risk was. So the dollar strengthening. And then the risk became the huge down days in U.S. equities and the Dow, that impact on global markets. And so the U.S. dollar started falling and the yen strengthened massively at that time as the Dow started to fall.
Yeah, that's the flight to quality you're talking about.
Yeah, and that's the flight to quality, but people chose the yen.
Flight to safety. I maintain that there's a difference in flight to safety and flight to quality. I appreciate it. So Amelia wants to sell the Aussie, and she wants to do it small and scale into it. And Scott's mad at the Fed. When we come back, we're going to have more on what's going on. Again, skeleton crew, so show must go on, I guess. We'll talk to you in a few minutes.